What's going on, guys? I'm back to you live with another week of breakdowns. Hopefully, you all are watching and you can see me live. Uh, let's see. Hopefully, I'm gonna go over here and see if I'm live. I've been doing this kind of solo without the Trading Up podcast recently, so again, bear with me. But I want to just break everything down, and if anybody watches, cool. If they don't, then we can watch at your own time, your own leisure. But again, I don't have to do the introduction this week because it's just me. But I want to talk a little bit about what's been going on with the charts. So I'm gonna go ahead and switch over. What's going on, Tony? Like I said, as long as I'm doing these calls by myself and without the Trading Up podcast, which should be for much longer. It's probably gonna just be not as many people on, which is cool. So I'm gonna go ahead and add this to the screen. I'm gonna make me smaller. Oh, other one. Whoa. How do I get me smaller? There we go, like that. There we go. So what's going on, y'all? What's going on, Tony? Hopefully you had a good trading week. So ideally, what I want to do is I want to just kind of keep things a little break things charts down a little bit. This is kind of going to be a combination of charts, but then also if you have questions about general stuff, I'm not really hiding anything. This is not broadcasted out to the Trading Nut podcast. This is just my actual podcast or actual YouTube channel, so I'm not really trying to hide anything here. What's going on, Hugo? One-on-one with the MJ of Trading is crazy. Yes, crazy. Man, the MJ of Trading is about to make a switch, man. I'm not doing so hot with the funded account right now, so I'm gonna probably make a switch. And I was actually gonna talk about this, and we can break these down in the charts too. But I actually think I've been struggling a lot with currencies right now, and I think has a lot to do with dollar direction, and it has a lot to do with a lot of things, to be honest. And I think it has a lot more to do with the government shutdown that's going on, right? Because it's throwing me off a little bit. I'm not even gonna lie to you because I don't have set days anymore where I'm trading. I'm really pretty much just looking at the charts every day, which is not good. It's kind of throwing me off my rhythm. Usually, again, with the NFPs, the FOMCs, like, it kind of gives me a little bit better schedule, like how I'm doing things for the week. So that's the first thing. The second thing is currencies is in a weird space right now. I'm gonna do the dollar breakdown. But currencies has been really weird the last few weeks, last month, pretty much. Pretty much since the shutdown has happened, and a lot of that has to do with no volatility because of there's no news releases, right? Like there's barely any red folder news. A lot of the red folder news is tied up with government stuff. Now FOMC I think still runs, but that's it. And so we're in a weird space, and this is the last government shutdown. I really don't remember what I was doing. So it's just, yeah, the Power 3 plays out a lot slower. And Tony said that it's playing out a lot slower. And at this point, you got to be really, really patient for things, or you got to just move to an asset class that's it's moving a little bit faster. So I'm kind of thinking about what I'm going to do. And I'm actually kind of thinking about what I'm doing this week. I might switch to a different asset class for the end of the year. I might go back to futures for the next few months until we get, or at least until this shutdown is done and we kind of get back to our overarching, like, overarching, back to the regular program, I guess. So yeah, so I've been thinking about that, and again, the whole point of being a trader is just that, right? We should be able to. I'm teaching you guys things that you're going to be able to look at across all of the asset classes. It's not just one asset class, right? That we're looking at. Like I'm teaching you guys how to read price across everything, and so first and foremost, that's the again, I'm not a Nasdaq trader, I'm not a Euro trader, I'm not a currency trader, I'm just a trader, right? And so knowing that these trades have different rules, and obviously, doing things that you um, they all have different, different patterns and different timings that you want to kind of line up with time and price theory, right? But at the end of the day, if you can read price, you can trade anything. So I've definitely learned a lot about myself during this government shutdown. I think the first and foremost thing that I've learned too is, again, when this is going on, and I'm kind of making notes because, again, I don't remember what I was doing last time the government shut down, and I don't think it was this long either. I think it was maybe like a week or two max, but this is looking like could go for a little bit, like maybe the rest of the year, right? So we're in a kind of weird space where there might not be any crazy news releases for the rest of the year. So if that's the case, what do we got to do? We got to get to an asset class that's moving a little bit faster, just naturally. So I probably will be looking at Nasdaq a lot more, and in ES and YM for the rest of the year. And then the second thing I kind of learned about myself is just really, again, the swing trading thing. I've been trying to really master swing trading personally. Like, I can project stuff, but a lot of times we know that the emotions is kind of like where the execution falls apart. And so for me, I've really been struggling to kind of be in a good space emotionally, while holding trades for long periods of time, right? So you guys have seen, like, I held, pretty much, but I was in a trade all week, pretty much the same trade all week. Um, and so it's not good for my mental health. I check my phone way too much. I think a lot of times I like to think about trading as being a sniper, right? So like when you're looking at trading, um, being a sniper, finding the best possible setup, taking the shot, and getting a chance to debrief, right, and kind of write down thoughts, what went right, what went wrong, right, and a lot of times if you don't give yourself the ability to take that step back and say, like, what's going on, what did I do wrong, what did I do right, and reflect, then it kind of stops you from you kind of everything just kind of runs together, right? And so for me, emotionally, like being in one trade the entirety of the week in a market that's not moving fast right now, my emotions were on edge. I made some mistakes, and I don't like that. So again, like, you got to reassess where you're at every week, every trade, right? And again, if swing trading is your thing, that's cool. I'm trying to change the way that I actually execute trades after doing it for a decade. And the reason that I've been trying to kind of focus on swing trading is just because I know personally in my life, I don't over the next few months I might not have as much time to be on the charts. Just some personal changes, and I'm still, obviously career wise and stuff like that. So I'm trying to factor all that in. I've been trying to get good at that, and I don't know if it's working for me. So I might just go back to what I've been doing, which is in and out in the same session. So it just kind of is, again, it's just, ebbs and flows, right? The thing about trading is that you have an idea of what you want to see, but you never really figure the markets out completely, right? There's always an adjustment period. It's kind of like a game of chess over and over again. So anyway, let's go ahead and get into it. I'm going to go ahead and talk a little bit about some of the charts that I'm looking at today. Again, dollar has been this really weird consolidated mess for the last few days. I'm sorry, last few weeks. Really, we're starting to get higher highs. I like that. I like to see that. There's a couple levels that I'm looking at. Again, the first level that I'm really looking at here is, again, just kind of seeing what's going on. We've been in this consolidated range. A few weeks ago, be mid-September, so almost 2 months ago, we came down here, swept these lows, and have started making higher highs ever since. I said we wanted to see the market take this high right here. We did come up and grab that. And really, I wanted for us to kind of see what we're going to do. Um, I thought, we were going to take this monthly high right here, and we did, and I thought we are going to close above it and potentially keep running up, right? Again, transitioning back. If we look at the overall arching market, though, if we go to that higher time frame, we are in a downtrend. I do have this really, really big fair value gap that's been sitting up here that's just been unmitigated, that I'm like, maybe we could come back up here and retest that. Mind you, we are in the middle of it looks bullish over the past few weeks, but this is an overarching downtrend, right? So we're looking to maybe even go higher up to here before we turn around and go lower. Right now, even if we just look at this, and again, this looks like just consolidation and chop, but you can see the run below the lows there with us grabbing sell side liquidity and then running up straight to a high. So really just kind of watching. This is the year is pretty much over, and we've pretty much been in this consolidation range since really April. This has been the year. It's just us trading in this, which is not It's whatever. I mean, usually what happens in the markets is that whenever we see a series of big drops, and this is a big drop, monthly drop, right? That we started out the year really strong. The market's just going to consolidate, right? And this could be, this whole year could have just been consolidation to run up to this next high to then drop down and keep going lower. So you got to think about when you're looking at things in the bigger monthly time frames, you got to kind of take a step back. And so, unfortunately, not every year is going to be like a distribution year. Some years are going to be consolidation, right? And this kind of like the last 6 months is what it's been. So ideally, coming into like what I want to see for the next week, again, we're bullish right now, right? We did run this high, close above it. So I got to stick with this idea of bullishness. We traded back down into this overarching fair value gap here. So what am I looking at? Well, we traded back into this fair value gap, the top of this breaker. And so I want to see if we can turn things around and go higher. Right now, we are in a bearish run. I don't know what this is on my charts. Sometimes I'm on TradingView and I see an indicator. I'm like, oh, what does this do? Right. Okay, cool. So we're in a bearish run. So I don't want to like overcorrect that right now on the 4-hour time frame. But if you look at the higher time frame, the daily, we are bullish. So what I want to see is how do we respect these levels? Do we start to invert old fair value gaps here? Right. If we look at this level here, that's the only one. So how do we play in this gap, right? When it comes to dollar. And so I'm not really too keen on what's going on with dollar right now. Again, we are starting to make higher highs, but again, it's 4 hours of pullback. So in order for me to really go long on this, like I want to, I gotta see some level of sell side disrespect. I'm sorry, civvies or old, old highs disrespected, right? So again, something like this would be the best option, right? Us running through this gap, inverting it, breaking structure, and then running higher. Again, as long as we're respecting these lows, then I gotta keep going with the downtrend for now. But again, since the overarching daily time frame is bullish, I would like this to eventually start going back up again, but can't really rush the process. And again, if we invert this gap right here, come back down, then I mean the next level really could be like if I'm looking at the weekly time frame, we could run a little bit lower. A lot of times I like to look at gaps, or I'm sorry, I like to look at wicks that don't have gaps under, or candles that don't have wicks underneath them, like this, because that means there's sell side here that hasn't been taken. So we could come back down there, right? I don't know yet, but this is just kind of me over projecting. It's still very choppy, and I'm not like a big fan of this. Ideally, like I said, I do want to see this run higher. I didn't really want to see such a rejection from that sweep of the high. But that's where we're at right now. So again, just being careful. Ideally, do want to see this continue on and go bullish, but just need a place for it to find. Best case scenario would be something like this. If I get rid of this, see there's now a fair value gap between this level here at 98.93 and 99.26. So would love to see the market drop into this like that, into this gap, and then go higher. Best case, worst case scenario, best case scenario, that's what I would want to see, is like something like this, where we're trading into this old BISI here and then take things and go higher. So that is what I'm looking at on dollar. So hopefully that makes sense. I'm still bullish, but that rejection is kind of concerning. We also are kind of respecting consequent encroachment of that wick too. So there's some stuff there. Like I'm not like completely sold either way. And so when we talk about like grading trading setups, right? Like as you're looking at your charts and you're kind of figuring out what do I want to trade for this next week, you gotta take a step back and say like, okay, like what's the clearest thing for me? Like what is the clearest thing to see? Like not what's moving, but like what's the clearest thing to see like that we're running to in terms of a target. And if you have a clear target, a clear draw on liquidity, right? We talk about this a bunch, right? Like, back in September, we had Euro, right? And I'm going to go to Euro just to show you guys. We had a really good draw on liquidity, right? And we saw this daily wick. Boom. This daily wick right here, we had this 100 pip wick, and then this rejection that came back down underneath the all-time high, or not the all-time high, but this most recent high there, like that. That is a very good sign the market is going to want to keep running lower, right? And if we went to that 4 hour time frame, you could see kind of our setup playing out, right? With this huge wick breaking market structure for value gap. And yeah, honestly, if you shorted there, you'd still be in profit almost 400 points later, right? So these daily moves, these bigger time frame moves, they give you a lot of direction on the bias, and all it really takes is one strong daily setup to give you weeks of really good price action. So ideally, coming, we can talk about euro too. So where I messed up at on euro this week, and people are gonna kill me here, but where I messed up on euro this week is I ended up, I've been in this situation where I've been trying to catch, a New York continuation play and then hold that through the rest of the week, and so that kind of backfired on me this week. So I was up a lot on my account. I know people are gonna like hate me for this, but again, I'm trying to really master this. Or at least was trying to master this swing trading skill set. Um, so for me, I ended up taking a position here. There was two really good New York continuation trades here. Again, you guys know about this because we talk about this setup all the time. But two really good setups on Monday and Tuesday. I ended up holding it a Tuesday, was at the low here, and then ended up getting stopped out somewhere in profit up there. And pretty much sat back and watched this entire run kind of happen. And so it was okay. I wanted to see the market, and I still want to see the market come down here and take sell side here at 1.3915. That's kind of my target. And so I'm just watching this. And again, when we're trading up the daily time frame, obviously all of my setups are based on the daily time frame, even if I'm executing the lower time frames, because that's what's going to give me the bias. So there's a couple of things here that I want to note. First thing foremost, we jump to the 4 hour time frame. We traded up into this overarching fair value gap, but also we traded into this SIBI here too. So I'll make this clear for you guys. And this is basically a definition of a setup where it's like, I don't know what's going to happen next, right? And ideally, it's going to fall back in line with the overarching bigger time frame, right? So this is the 4 hour gap. It's going to come back down and disrespect the SIBI and then keep running lower. But there's no trade here until the market runs lower. So until the market really gives us a sign that it wants to disrespect something and run higher or lower, there's nothing to really do here. So you're going to be watching, and if it keeps running higher, this is going against my overall bias, right? Because we're still in a downtrend on the daily. So I don't want to buy anything here. I don't care how good this looks or how tempting this looks. You can't really buy this. So really what I need to see before I can go higher is I need to see this fair value gap right here inverted, right? So basically I need to break in market structure back below this low. So we need something like this. Something like that. Maybe it retests and then we keep going lower. But I can't really do anything until that happens because again, I'm bearish. And I could try and short this. I mean, like, don't get me wrong, like this is a break in market structure here, shorting, but like you're shorting this prematurely because you're basically shorting on a 4 hour bullish break of structure, right? Like this is bullish, it's going higher, right? Even though it's bearish, even though this is just the pullback on the bigger time frames, you still got to wait for this thing to turn around before you start to enter. So there's really no trade for me to take on this until we invert this gap. Now currencies again is just moving slower. Like we said, it's there's a lot less volatility here because there's no news releases, and it's also harder to plan your day too or playing your weeks. Usually like I can look at the calendar and I can say like based on the 4 hour time frame or the daily time frame, then I can make an assumption about like what's going to happen. And I look at the calendar, right, and to see like where the market's going to be at for the week, and I can kind of put together like when that's going to happen, like, most likely. And because I don't have that, like again, it's making my trading a little bit disorganized because of that. So it's harder to know when the market's going to do what it's going to do, and if it does, it's going to move slower. And so you got to be very patient. You got to be very patient, and you got to really manage your risk. And honestly, you got to manage your risk really well too, because dollar doesn't have a direction. So if you're trading euro, if you're trading currencies, again, I always talk about dollar being king. but there's no direction on euro right now or on dollar right now. So it's kind of hard to make a long term or really go all in on currencies right now because it's in addition to the no folders, no news because of the shutdown. Dollar is also not doing great. So there's not as many confluences or like things that I can stack on top of each other to kind of build out the idea that it's going to do this. So if you are trading euro, like, I'm not saying it's not good to trade, but you just got to be careful. That's all it is. Just got to be careful. And yeah. And so with that being said, I'm most likely gonna probably focus on NQ for the rest of the year. Right. I still think we have a few good weeks of trading left. At least probably to the beginning of December. I know last year I went straight through and went to and pretty much didn't take a break, or I think I took like the week of Christmas off, and there's really good market setups until then. So for me, I'm probably not gonna be taking any time off again. But we're also in a different space, right? So last year we didn't have a government shutdown. We didn't have any of this crazy stuff going on. Um, so it's kind of hard to tell. But ideally, I'm gonna try and find something that's gonna move a little bit quicker, a little bit faster. And if that means me going back to futures prop firms for a second, then I gotta do that. So that's I'm gonna figure that out. But that's what I'm gonna be doing. So let me look at the comment section. Let me jump back over here. So says swing trading is hard for me because I always want to take my money when I'm supposed to hold for longer. And that's the thing too, is that like you never go broke taking profit, but also swing trading is like if you to be honest, how big banks and big hedge funds and institutions trade, they're actually trading it. Most people think they just kind of pick one, it's what swing trading or short-term trading or long-term trading or scalping, but they actually do all of them, right? So they have different divisions that are kind of devoted to different like wins. So like you might have a trader, like a desk that's more day trading. You might have a desk that's more scalping. You might have a desk that's more swing trading and long-term positioning, right? But they're trading a lot of times. They're trading off of this time frame here, right? So they're looking at the weekly, and they're taking positions in the daily and the 4 hour based on like what's going on here, right? And so it's hard to say, but they're also managing a lot more money, and they're kind of treating it more like a job, right? And it's easier to trade when it's obviously other people's money, and it's obviously easier to trade when you're on a full-time salary. You're not really tripping out. You're just kind of making the best decision possible because you're getting paid, right? And they're not managing as much risk, right? Like day traders, we're managing like a lot of risk. Like I'd say like any of us are probably at least 20 to 30 good trades from blowing up our accounts at any given time, right? Most hedge funds, they're so well positioned and so well spread out that like I mean they have whole like departments that are just devoted to how much money you can trade, how much money you can risk. And so they are doing a really good job of managing traders' risks so that if one given trader blows up, it's still not going to hurt the firm, right? And that's why hedge funds, their percentages are a lot smaller, right? Like you could do a 7% hedge fund. You use like somewhere between 7 and 10%, or just under the S&P for the year. Most don't outperform. I've done wow in the last 2 months, passing both challenges. I've done I've made 30K in virtual profits, right, on a 200K set of accounts. Actually, it's got to be more than that. It's like 40K. Well, 30K altogether. Yeah, 30. Yeah, something like that. 30 or 40. So like, and that's like a 20%, you know, basically month, right? And so as day traders, our best skill is that, or our best like opportunity here is the fact that we're not so leveraged, or that we're overly leveraged basically, and we can get in and out of positions we want to because they're trading off of these time frames. So I guarantee you, like if someone's trading with the same concepts that we teach, they might have bought here and maybe they thought the market's going to run all the way up here, but now they're stuck in drawdown here, and they're looking at things day to day, week to week. They're not really looking at things from like 15 minutes to 5 minutes or whatever for the most part, unless it's their particular division. So it's easier for them to do shit, basically, is what I'm trying to say. It's easier for them to do a lot of things. And so There's a if I'm looking at this right now, GBP is a little bit clearer. If I look at the weekly time frame, I don't really still like it where we're at right now. We are still running up. I think if I had to guess what we're running to, there's two levels on the daily time frame that I think the market's going to want to run to. Now it could be, yeah, this one right here. Sorry, and then this volume imbalance right there. I'm gonna make that gray, the gray. So volume imbalance is just a gap between two candles. Get basically it's a liquidity void where markets aren't pricing, and so I like to see these things get filled in with a body laying over them. It did kind of run through that already, so just making a note. And then this fair value gap right there. So again, swing trading, when I'm doing these breakdowns, I mean, there is opportunities to swing trade based on this daily structure, right? Like you could be long until it hits here, or you could look to go short in there. But it's harder to do, right? Like it's hard to actually execute. At least for me, some people might not have a problem with this, but like sometimes it's hard for me to execute trades like this because I want to check my phone. I get in my head, I'm up, then I'm down, right? And it's like I'm devoting a lot more of my day and week to trading than I want to. Like I want to be able to get in, get out, look at my sessions, and kind of move on and do what I got to do. And but you make the most money over time swing trading, so you gotta be able to pick and choose. It like I said, it's a skill that I want to get better at. I just don't know if it necessarily jives with like my personal like emotions and tolerance level. So Tony brings up a good question. He said, "Coach, being that it's November, what about strength going into the end of the fourth quarter?" So it's actually the opposite, right? So most people and this is a corporate thing. It's not just a trading thing, but like most people are wrapping up for the year, right? So even like in my career right now, like I work in marketing, right? And so we're pretty much done for the year. We have a couple executions that we're trying to knock off and get done, but everything else right now is kind of shifted to 2026. People, in the next few weeks, like once Thanksgiving hits, everybody's going to be thinking about holiday and making sure that they just finish the year strong. They're not really trying to like do anything crazy. The money that we have might already be spent, whatever. And it's the same thing in this world. Like when you get to this end of the fourth quarter, they're just trying to make sure they don't do anything stupid before the end of the year, right? And so that's how hedge funds and traders are because like the worst thing you could do is blow up your account or blow up your fund going into the holidays, right? Like you're so close to the end of the year. Um, so that's the first and foremost thing. So I would say, with that, I don't know if it's going to be strong. I don't know about strength going into the fourth quarter, and strength is kind of relative because I mean GBP USD are currencies, right? So like one of them is always getting stronger, right? Or one of them is always getting weaker, because it's the relationship between the two. But if you're just talking about like Nasdaq or like gold, um, I mean, we could talk about. I could just kind of switch right now. Let's look at gold. This right now, like this kind of looks like, to me, this looks like we might have formed the high for the year, and we might just consolidate for the next few. We could really be here until next year, right? I don't know yet. Like I'm just, this is just, there's not really, it's hard to pick a direction, right? And so I talk about this. Hugo knows this because I talked about this a lot in the first mentorship that we did with indices. But I'm gonna get rid of all this, right? So you have basically what's called, I'm giving away game for free this week. I don't really care, but you could basically have what's called premium and discount, right? So like the market, runs in ranges from what's known as a premium level and premium level, and then you have what's known as a discount level, right? So the market runs from premium to discount, right? So when stuff gets too expensive, it moves back to an area where it's cheaper, so you can keep buying, or vice versa, right? When it's too cheap, it moves to an area of discount. And so when you look at this big price swing right here, we're kind of trading just under, and honestly, if you can like that, whatever, I'll just keep it here because this price swing. But yeah, so you're looking at this most recent price swing, and I would love for us to get back to an area of discount, right, before we start to go higher again. What that looks like is, potentially maybe the market running back down below this. And if you look here, if you look at where the market wicked at, it wicked in that fair value gap. That's pretty much sitting in a or sitting above the 50% level. So it's really close to that discount level. Discount will be anything under 50%. So I mean, there is the idea that the market could keep going, but it's not really ready to make a direction yet. And so again, when I'm thinking about like picking a pair or picking something to trade, this is mess, right? Like this is choppiness, it's consolidation. I want to see the market run for something. Like it needs to run for something for me to like start to come together with the idea that I want to trade it. So this was cool when it was making these highs and it was pulling back. It was cool, or even when it was pulling back to a level, then I can kind of frame that out. But right now it's chopping. If it starts running above these highs like this, starts going up like that, then maybe I can frame out that the market's running for, these relative equal highs right here, right? Or something like that. So, like with that being said, I don't know if I guess long story short, I don't know about your about strength going into the fourth quarter. I mean, we're in fourth quarter. We're almost halfway through fourth quarter because fourth quarter starts in October. So, um, I just think this year is going to be like, I mean, don't get me wrong. There's still a lot of trading left for this year, but I just think that with the government shutdown, that handicaps a lot of how I look at things. I mean, again, there's no volatility really in currencies at all. There's also not a ton of like explosive moves that are happening in Nasdaq. There's moves for sure, but they're not they're not moves backed by any type of news releases or anything like that. So like even if I go back to euro, right? Like let's just look at it. This range here, I mean, is that this week? No, it's not even this week. What was this week? This was this week's range right here. We went from 576 to 468. So that's 100 points. And then we came right back, right? So the whole range for the week was just 100 points, 100 pips. That's not a lot at all. Sometimes you get 100 in a day, right? Like, so it's not really, there wasn't really like a ton of movement on euro. And honestly, the last few weeks it has gone down over time, but it's gone down. It's been very extremely choppy. The pullbacks are crazy because like look at this, right? 77 to 540, right? So we dropped 200 points and then gave right 100, like more than that, 780, 520, so like 260. So we dropped 260 and then came right back and with 250 pips in the opposite direction. This is very like frustrating trading to sit through because you're still going to be bearish all the way through this, but like watching it, imagine if you're swing trading this and you pretty much gave everything back. You got to hope that it doesn't come back up and get you, or even this trade right here, right? I wanted to see coming into Tuesday, I wanted to see the market, just drop from here. Like we had this huge wick, right? It came back into that fair value gap. It let me know, okay, that's probably go time. And so I was like, okay, cool. We're probably just going to run down another 100 pips. Like this is going to be easy. And it just came right back and took that away. So just being very careful. I would say like there's nothing to over really risk here. Like there's nothing here that you want to like for the rest of the year, like whatever you're trading, like contract size, like cut it in by a third or a half, right? Like there's nothing here that's like, good stuff to really frame anything on, at least in currency spaces. Again, a lot of this is chop. As we get to NASDAQ, it's a little bit better. NASDAQ there's been a pretty aggressive bearish run that we've been this week. Again, I try not to, like over time, NASDAQ does run higher. So I try to be kind of bearish or bullish minded with NASDAQ. But as you can see here, this was pretty much all of Friday. This wick was pretty much Friday's price action. Traded into this order block here. There's a huge gap there too, but traded into that order block there, rejected. There is this secondary gap that's right there. So basically we had a week where we took out sell side there. We took out the low of last week there too. So and then respected that. And then with this huge wick here, I kind of want to see the market run higher. Going to the daily time frame again, you can see that like we took out sell side below this low, this low, this low. So we took out a lot of sell side liquidity and then closed right back below the low of Thursday. So this was pretty much just a huge liquidity run where we took out the previous, honestly, the previous couple weeks of liquidity right there. I did think that initially we were going to come down here, these relative equal lows. So what do I want to see going into this week? So this week, I mean, we pretty much engulfed this candle right here. I would love for us to we didn't take out the low there, but we ran below this low, right? And then engulf this candle completely. So that's a pretty solid liquidity run. I want to see this market run higher. So I'm thinking like something like that, where we might even trade back down into this overarching fair value gap there, and then just keep running. There are these relative equal lows, or sorry, there are these kind of like somewhat clean highs right there that we could run to. And then I'm also looking at this fair value gap. I think we are going to be bullish for the next few weeks though. This big one is what I'm really looking at and looking for. So I'm going to kind of frame this as my next target. It's about 300 points away. Just going to do this. Oops. Something like that. But ideally overall, again, you just want to be very careful with what's going on right now. There's nothing here. And I know this looks bearish, right? So ideally, maybe even the best case scenario is the market takes out this high and gives us something to trade into. But ideally, I mean, with this big of a wick, right? I mean, I would like to see the market really run higher. I mean, look at the last time we wicked like this. We came down there, took out these low, took out that low right there slightly, just very slightly, and engulfed, it came up and took out that candle. So I think this market's going to run higher again. I just don't know if it's going to happen before the year is up. So that's NASDAQ. I guess ideally, if I should draw something out, again, I just want to see this. I mean, this looks pretty engulfing, but ideally I want to see us maybe take out this high here at 23,353 and then run a little bit higher. Same thing here on ES. I mean, if we're looking at this in the daily time frame, I mean, I think anybody would call this bullish. I mean, this is a pretty easy run here. We might trade back into this range somewhat, right? If I just do this, we might trade back into this inverted fair value gap. We swept liquidity, inverted this fair value gap. We're going to keep running higher, probably, most likely. I'm going to definitely be looking to long this going into the Monday. Something like that. So ideally, again, I'll be looking for the range high to get taken. So this is ideally what I would like to see. And then also with ES and NQ and NASDAQ or whatever, I'm really looking at things day to day, right? I'm looking at things to see like how we're trading daily versus like long term, because stuff is changing rapidly day to day. So, but ideally, just based on that 4-hour time frame, I mean, I'm gonna be looking for opportunities to get long until here, right? I think with us sweeping this low, this external liquidity, and then running up to this buy side, I think that's the most likely, target. There's a small fair value gap right there, so maybe I'll evaluate when we hit that. But really, just looking for the best opportunity to get there. So, so I know it doesn't look fully bullish yet, but this is basically, my version of or I guess an alternate version of the setup, right? So when we think about us taking out sell side, taking out liquidity there, and then inverting something that's bearish, right? This is a bearish fair value gap. We should be respecting this. And then not only that, but we also kind of inverted this, inverted, but like are not respecting this order block or the mean, the consequent encroachment of that. We pretty much closed above the high of that. So there's not really a reason for me to want to see this market run back down here. I think we pretty much did what we were supposed to do. Took liquidity, inverted something that was supposed to be respected, and then so I'd be looking for us to get to this high. I don't know how quickly it's going to get there. Could be today, could be tomorrow, could be whenever, but so that's what I'll be looking for. Let me look at ES, YM, kind of the same idea here. Like I guess what I'm saying is I'm very bullish on indices going into next week. Doesn't mean I'm gonna long this as soon as the market opens up, but really just looking for opportunities that the market can, take long. Right. So be looking at something like that. So that's all I got for you guys. I think I covered everything. Again, I'm going to be switching to indices. I'm going to be looking, again, if you're one of my students, you're going to be looking at Power 3, right? You're going to be looking at a lot of different things. Obviously, you can see that there, right? But just in general, again, I'm going to be probably switching and looking more at indices this week. I mean, there could be a good setup with Euro. I'm not saying that it's not going to happen. It's just a very choppy, very, very choppy run right now. It's not giving me the liquidity that I want to see. So, boom. So again, as I'm looking at, the Power 3 kind of playing out here each and every day, I'm going to be looking for those things to be, playing in addition to like the overarching like ideas that we have. So that's what I'm going to be looking at and looking for. Let me look at this. So he's talking about Santa Claus rally. I mean, like, yeah, it's not, it happens, but like, you can't really I can't really, I mean, you can predict that, you might see like at the end of fourth quarter, like, stocks and certain stuff rising a little bit, but not, it's usually like, I mean, if you think about things from just a technical perspective, right? Like, our candle's usually going to form like this, right? It doesn't matter if it's a daily or weekly, right? We're going to open it up. We're going to run lower if we're bullish, and we're going to run higher and close higher. And there's going to be obviously wicks. Something like that. So, I mean, usually the high is never closed upon the high. It doesn't mean it's going to rally. It's not going to rally higher. I do think we're going to go higher. I just don't know if it's going to happen that quickly. So that's all I got. Hopefully you guys got some value out of this, and hopefully you guys kind of learned a little bit about, where my head is at right now. But again, I'm just at the place where I'm going to probably be focused on indices for the rest of the year. So I'm going to see if I can make some magic happen, see if we get have some fun runs, and yeah, go from there. So hopefully you guys enjoyed this, and then if you guys have any questions, just follow up on social media. Again, Brinks Trades, or if you're in the Discord, that'd be awesome. So all right, guys, peace, have a good one, and catch you in the next call.